Welcome back everybody to Cryptocurrency Weekly, where I keep you up to date on what's happening in the cryptocurrency space. From technology updates to the latest news, we have you covered. So if that's something that interests you, please subscribe to the channel and give the video a thumbs up, and please comment your thoughts below. This channel is for information purposes only and is not investment advice, nor is it buy or sell signals. This is my opinion and that is all. So with that out of the way, let's get right into it. So big news out of DeFi. So for those of you that know, decentralized finance is removing the middleman equation. So you've got a centralized cyber bank currently, like, Coinbase, Binance, all of the major exchanges. So what DeFi is doing is a pool of coins is, software code that's just going to match buyers and sellers. Okay. So DeFi will begin replacing Wall Street functions in the financial system. And that is pretty clear that will happen over the next 10 years. Now, we've got big news now. So flash loans are absolutely exploding within DeFi. So what are flash loans for those of you that are new? Flash loans are a type of uncollateralized lending that have become very popular in decentralized finance. While they've proved popular, flash loan exploits have been used to attack vulnerable DeFi protocols and steal millions of dollars. So what are flash loans? With a run-of-the-mill loan, the lender usually wants some kind of collateral to make sure that they get their money back. The contract often takes a while to get approved, and the borrower pays back the loan with interest over a period of weeks, months, or years. Flash loans are the antithesis of that. They do what they say on the tin and occur in an instant because the funds are both borrowed and returned within seconds in the space of one transaction. It's made possible because of the innovative properties of smart contracts which set out the terms and also perform instant trades on behalf of the borrower with the loan capital. Flash loans that result in a profit are typically charged a 0.09% fee. If the borrower doesn't repay the capital or the trade doesn't make a profit, the conditions set out in the flash loan smart contract aren't met and that transaction is reversed. Just like it never happened with the funds returned to the lender. So in theory at least, there's minimal risk for both parties. So in a nutshell, flash loans are unsecured. Instead of providing collateral, the borrower immediately repays a loan. Instant. The capital is borrowed and repaid in one transaction. Innovative. Flash loans use smart contracts to set out terms and perform instant trades. So why have flash loans become so popular? Flash loans were first introduced in 2018 by a forerunner to DeFi open source bank Marble. They arrived on the Ethereum network in January 2020, courtesy of pioneering decentralized lending platform Aave. By July of that same year, Aave was regularly issuing more than 100 million in flash loans each day. And now fast forward to June 2021, and the platform has issued almost 4 billion in flash loans. So it's very clear that the space is growing and the protocols are maturing and more users are being brought into the ecosystems. So a lot of you will want to know, are flash loans safe? Well, they're not going to be safe at the moment. It's an emerging technology and there's lots of things that can go on, like rug pulls and people making off with your coins. But with extra risk, like anything, these things can pay off. They can't pay off. It's up to you if you want to decide to take the risk. I only have one DeFi investment at the moment just because my risk profile, I'm not as high on the risk profile as what other people like to be. I don't like to take a massive amount of risk. Relative to, already in a riskier market. So I'm quite content to watch these protocols mature a little bit more, as well as the NFT space. Flash loans are still very much a work in progress. The flip side of their rapid adoption by the decentralized finance community is that they've been used to exploit vulnerable DeFi protocols and steal millions of dollars. In February 2020, lending protocol BZK was the focus of not one but two flash loan attacks. A borrower fooled a lender into thinking the loan had been repaid by temporarily pushing up the price of the stablecoin being used for payment. Most flash loans are denominated in USD peg stablecoins. In July 2020, MakerDAO and Circle's USDC made up close to 95% of all flash loans issued. So we've noticed that more flash loan exploits have continued into 2020 and even to 2021. So there's no doubt, there's no sugarcoating this. It's an extremely risky part of the crypto market now. Obviously, the crypto market is already risky to begin with, but the DeFi side of things are still extremely risky. They remind me a little bit similar to the ICO craze of 2017, but obviously I am of the belief that DeFi actually has a future, whereas ICO was just a clever way to steal people's capital. Where can you use flash loans? Flash loans are used across decentralized finance protocols based on the Ethereum network, and more recently on Binance Chain, which also has seen flash loan attacks. Keep in mind though, guys, Binance Chain isn't decentralized. It isn't DeFi. It's more of a CeFi product. Okay. Aave is still the leading provider, but others such as DYDX and decentralized exchange Uniswap have introduced flash loans and flash swaps. On Uniswap allows users to withdraw Ethereum-based tokens pairs with other tokens, to do whatever they want with them and then immediately return the equivalent amount. What is the future of flash loans? Well, the author goes into it here of what he believes that will be. So flash loans are still in their infancy and are being used for ever more innovative purposes, such as borrowing funds to buy tokens in order to push through governance votes. Practices such as this could have long-standing repercussions for protocols, and some have made moves to curtail them. Perhaps as some believe with the evolution of DeFi, these types of lending will be seen as flash in the pan, but others argue for their evolution with their design of ever more secure protocols that have the potential to increase market efficiency by giving everyone money for nothing and the opportunity to be a crypto whale if only for a few seconds. Next up, we've got CEO Brian Armstrong, who has flagged self-custody and DeFi access as Coinbase priorities. So Coinbase has seen that, DeFi has a huge potential, and now he's trying to integrate that into Coinbase, which is obviously a centralized platform. So keep in mind when, people like Coinbase are doing this, they're trying to stay relevant because they are smart and they see the big picture of, okay, anything that's a centralized exchange, look, it's not going to exist in 10 years from now. Look, nothing's certain, but I don't think it's going to exist, and they're just trying to get as much juice from this as possible, all right? So he goes on to say, decentralized finance is the future of where the industry is going. That's according to Brian Armstrong, who is the CEO of Coinbase. We're seeing crypto quickly mature to the trading of thousands of new assets and the adoption of new use cases, including DeFi non-fungible tokens and smart contract decentralized autonomous organizations. Armstrong wrote that Coinbase expects to add assets to the platform more quickly, broaden its geographical focus to ship products that work globally, and construct a crypto app store akin to Apple's. In the more immediate future, Armstrong wrote Coinbase would cut the length of its legal review to evaluate asset issuers from 70 to 12 questions and create a more efficient compliance and security review process. Coinbase will also construct what he termed an experimental zone for new assets, ensuring the company can provide a fuller picture of their risk for customers and take steps so that users can access most assets for basic wallet functionality. He goes on to say that he promised to send more products to new international markets while still working with regulators in more established markets, and that any app built on decentralized crypto rails will be accessible to users of the Coinbase app. He added also that customers would have the option to do self-custody of their crypto in the main Coinbase app. So this is a positive, that they're giving their users an opportunity to self-custody, because that's the entire point of cryptocurrency to begin with, okay? But the entire point of cryptocurrency being decentralized will mean, obviously, that in the future, in my opinion, that these centralized exchanges the majority of the crypto users have or use will not be used, okay? All it's going to take is time for decentralized exchanges to be able to integrate with fiat gateways, and then I believe it's going to be game over for centralized finance. So I think personally it would be very interesting to see how the governments, particularly the Chinese government and potentially other governments in the world as well, will deal with trying to regulate decentralized finance, because they can regulate Binance, they can regulate all the other centralized exchanges, but how can they regulate a decentralized system such as a decentralized exchange? Let me know your comments below, and also feel free to check out the latest video, Crypto Market Today, government crackdown on Bitcoin, so you can see where I'm coming from and how they've used regulatory constraints to try and, stifle the Bitcoin network. Thanks very much for tuning in, and I'll see you next time. Take care. Goodbye.